Welcome to CRE Fast 5 and today's update on the state of the retail industry. Today's snapshot is courtesy of the CBRE Econometric Advisory Group and focuses on Q3 2022. As you will hear, retail real estate fundamentals remain surprisingly strong. However, I would be remiss to not acknowledge that the interest rate environment is wreaking havoc on capital markets across all asset classes, with investment volume dropping 24% year over year in Q3. That small detail aside, there is a lot of good news in retail overall, which could actually present an opportunity for investors. So let's go. First, let's start with one of the most positive indicators of asset stability for investors, the overall retail availability rate. Retail availability fell to a 17-year low of 5% last quarter. High development costs, equipment scarcity, and tight construction labor markets have caused many retail tenants to renew leases. The only category to see an increase in availability was the mall category, as Class B and C malls have struggled to retain tenants. Conversely, availability in the power center, neighborhood community, and strip center segments have all tightened significantly. Another factor contributing to the historically low availability rate are the limited retail completions. Retail deliveries are still at a record low rolling 12-month total. The annual completion rate for U.S. retail has remained below 1% since 2010, which has created a scenario where the current supply is resilient to negative economic effects. Western markets remain a primary target for developers, with Dallas, San Francisco, Houston, San Antonio, and Los Angeles among the top 6 markets for Q3 2022 completions. Another positive market indicator is retail rent growth, which has been very strong, although the pace of rent gains is starting to level off. Overall, retail asking rent grew by 2.5% year over year to a record high of $22.55 per square foot. But note that the quarter-over-quarter growth rate was down from the previous 3 quarters. Now, some argue that this is largely due to the lack of prime space remaining on the market, and as we just saw, limited new high-quality supply. So now let's take a look at things from the retailer side and discuss holiday sales forecasts. The 2022 holiday sales season is expected to provide a boost to retail, with year-over-year sales growth forecast of 6.9%. Inflation continues to boost retail sales, but some of the quarter-over-quarter numbers are starting to tell a different story, with results being mixed. Gasoline sales, which grew by 29.4% year-over-year, showed sales declines last quarter. The miscellaneous category, which includes things like pet supplies, tells a similar story, with strong year-over-year growth but declines last quarter. Home furnishings, electronics, and appliances were one of the only categories to be down both year-over-year and quarter-over-quarter, showing a significant shift in buying patterns. To conclude, it's our belief that the retail market remains resilient, with record low availability, limited new completions, and stable rent patterns. Investors should watch retailers' sales, as that could be a leading indicator as economic conditions shift. If you would like to discuss the market in more detail or have an existing retail asset that you would like to discuss, please give me a call. That was CRE Fast 5. I'm Carly Iacono. I'll see you soon.